What if I told you that Warren Buffett has recently made an unusually large bet on a hidden stock? Would that pique your interest? Well, it's true. The Oracle of Omaha, as he's often known, has just made a sizable move that's been largely under the radar. He's invested in a company called Liberty Media, a conglomerate that owns a diverse range of businesses including Formula One, SiriusXM, Live Nation, and more. Now, this isn't your typical Buffett investment. We're all used to seeing him put his money in more conventional stocks, like the bet he made on Activision Blizzard last year. But this time, Buffett has taken a different route. He's placed a significant arbitrage bet, confident that a certain corporate merger will go through, and if he's right, he could make around a 25% return in a relatively short span of time. So, what's this merger that's caught Buffett's attention? Well, it involves SiriusXM Holdings and Liberty Media. Late last year, these two companies announced they were entering into definitive agreements to merge. This merger seems highly likely to happen, and if it does, Buffett stands to profit handsomely. But how exactly is he planning to exploit this situation? It seems he's found a bit of a loophole in the stock market, a way to make money that's not immediately obvious to the casual observer. It's a strategy that's both sophisticated and intriguing, and it's one that could pay off big time. However, to fully understand the genius of Buffett's investment, we first need to delve into the details of the announcement made by SiriusXM Holdings and Liberty Media from late last year. So stick around, because in the next scene, we're going to dissect this announcement and uncover the secret behind Warren Buffett's latest investment. Let's dive into the intriguing announcement that SiriusXM Holdings and Liberty Media made. It's a bit complex, so bear with me. Both companies, SiriusXM, a leading audio entertainment company in North America, and Liberty Media, a giant in the mass media industry, announced that they've entered definitive agreements. The goal? To merge Liberty Media's Liberty SiriusXM Tracking Stock Group, collectively known as LXM, with SiriusXM. This merger is set to birth a new public company, aptly named New SiriusXM. This new entity will continue to operate under the SiriusXM brand, maintaining its reputation and market presence. Interestingly, New SiriusXM will have a single outstanding series of common stock. This stock is expected to continue trading on the Nasdaq Global Select Market under the ticker symbol SIRI. In simpler terms, SiriusXM and the SiriusXM tracking stocks of Liberty Media are on the verge of merging. Now, this might seem like a routine business maneuver, a consolidation of resources and brands, but then again, we wouldn't be here if that was all there was to it, would we? In the midst of this merger, Warren Buffett, the Oracle of Omaha, sees a golden opportunity, a window of opportunity that he is not one to let pass by. But the question remains, how does a merger between SiriusXM and Liberty Media's tracking stock group create an opportunity for Buffett? This seemingly simple merger is where Buffett sees a window of opportunity to make some free money. But how? Well, that's the million-dollar question. And to answer that, we first need to delve a little deeper into Liberty Media and its operations. I promise you, it's a fascinating journey, and it's up next. To understand how Buffett plans to cash in on this merger, we first need to understand the players involved. The stock that Buffett is eyeing is Liberty Media, a robust mass media company in the United States. This company has several business segments under its umbrella, each of which contributes to its overall value. First and foremost, Liberty Media owns a staggering 83% of SiriusXM. SiriusXM is an American broadcasting corporation that provides a plethora of satellite radio and online radio stations. It also offers the music streaming service Pandora, adding another revenue stream to its portfolio. In addition to its broadcasting assets, Liberty Media took a leap into the world of motorsports in 2017. They purchased Formula One and recently added MotoGP to their roster. This motorsport arm of their business is known as the Formula One Group. This group also includes an ownership stake in F1 Arcade and Maya Shank Racing, complete ownership of Quint Events, and a few other motorsport-related assets. But the diversity of Liberty Media doesn't stop there. They also have a live entertainment arm of their business. This includes a 30% stake in Live Nation, a music concert company that owns Ticketmaster. Apart from that, they have small stakes in several other businesses, including the Drone Racing League and Tastemade. This diverse portfolio of businesses and ownership stakes gives Liberty Media a broad reach across several industries, from broadcasting to motorsports to live entertainment. It's a company that has positioned itself at the intersection of various profitable sectors, each with its unique prospects and opportunities. Now that we have a better understanding of Liberty Media, we can start to see why Buffett might be interested. But the question remains, how does he plan to profit from this merger? So, how does Warren Buffett plan to exploit this merger and make a hefty profit? Well, here's the thing. Liberty Media, the stock Buffett has his eyes on, isn't your typical stock. It's a tracking stock, which means it's linked to the performance of a specific division within the company, in this case, SiriusXM. Now, with the merger announcement, each share of the Liberty SiriusXM Group tracking stock will be converted into one share of SiriusXM. Here's where it gets interesting. At the time of the announcement, the Liberty SiriusXM Group tracking stock was trading at a significant discount to SiriusXM. This means that Buffett could buy the tracking stock at a lower price, and once the merger is complete, effectively own SiriusXM shares at a discount. So, Buffett's bet is essentially on the merger going through and the market correctly reevaluating the value of the newly merged entity. If all goes according to plan, he stands to make a substantial profit from the difference in the stock prices. However, it's important to remember that this is a bet. There are risks involved. The merger could fall through, or the market could fail to reassess the value of the stock as expected. In either of these scenarios, Buffett's investment may not yield the desired returns. But this is Warren Buffett we're talking about. He's one of the most successful investors in the world, known for his astute understanding of the market and his ability to spot undervalued investments. He's made similar bets in the past and come out on top, so it's certainly possible that he'll do so again. Remember, investing always involves risk, and it's crucial to do your own research and understand the potential implications before making any investment decisions. But there's no denying that watching Buffett's moves can provide valuable insights into savvy investing strategies. So, there you have it, a sneak peek into the mind of one of the world's greatest investors. It's not every day that we get a glimpse into the investment strategies of someone like Warren Buffett. Today we've not only had a peek but a deep dive into one of his latest and rather unusual investments. Buffett's sizable bet on Liberty Media, a company owning significant stakes in SiriusXM, Formula One, Live Nation, and several others, is not your typical Buffett-style investment. Traditionally, we have seen Buffett lean towards companies with a clear competitive advantage, strong management, and consistent earnings. However, this time, he seems to be exploiting a stock market loophole to potentially make a significant return in a rather short span of time. This investment, revolving around the anticipated merger of SiriusXM and Liberty Media, is an arbitrage bet. Buffett is betting on the successful completion of this merger, and if it goes through as expected, he stands to make a substantial profit. This strategy is a departure from his usual value investing approach where he buys stocks of companies he believes are undervalued by the market. Instead, he's capitalizing on the price difference of a single asset, in this case, Liberty Media's stock, in different markets or in derivative forms. So what does this mean for future investment strategies? Well, it's hard to say. It could mean that Buffett is becoming more open to alternative investment strategies, or it could just be a one-off opportunity that he couldn't pass up. Only time will tell. Remember, while we can learn from Buffett's strategies, it's important to understand that every investment comes with risks. Always do your own research and consider your own financial situation before making any investment decisions.